Welcome back, Alpha Hunters. All right, so the market just closed for week of the April 29th, okay? And we had a pretty dramatic move today. Yep, I'm using that word, dramatic, because it was a move. This is by far one of the biggest down days I think we've had in a while. And not only was it a big down day today, we really traded the whole day down. Like, we didn't gap down too hard or anything, but we sold down the whole day pretty hard on Friday. So let's just go ahead and walk through what went on this week. And really, we had a lot of big time tech companies earnings reports, okay? So we had Microsoft. They reported they actually did pretty well on their earnings. They did have a gap up. They didn't trade up too hard, and obviously they got kind of hit pretty good today, along with the rest of the tech companies. I would expect more downside on Microsoft, not really just because Microsoft's bad shape. They actually did really good on earnings. I do think they're a pretty good stock. They're just going to get caught up in the marketplace selling down, especially here on the near term going into next week, but we'll get into that a little bit later. The other company that did pretty good this week was actually Apple. They reported yesterday after the bell. They actually didn't do that bad, but they did talk about some supply chain issues, so that was kind of hitting the stock. You saw them pop pretty good this morning, and then they just traded down the rest of the day, kind of just taking the market with it. They were the last kind of one standing this morning that wasn't trading lower. Then once they got going lower, the rest of the market started going lower. So those two did pretty good. The other one that did pretty good, well, actually, they didn't do pretty good. They did really, really well as far as market performance. I wouldn't say their earnings were stellar, but it wasn't as bad as what a lot of people were expecting as far as like not using the platform and stuff like that, losing user base. But Facebook or Meta platforms, obviously they did pretty good. They still have a lot of people using their platforms and stuff like that. I'm not really digging the buy here though. I do like more of the bearishness. We might probably see some bearishness come in, probably see a pop higher over the next couple months, and then when we get that pop higher over the next couple months, I would look for the bearishness to come back in on Facebook. But for now, I really wouldn't be touching this. I would let it kind of go higher over the next couple months and then look for probably a short play, because they still are having issues with the metaverse, their so-called metaverse, costing the company billions of dollars, which still don't know if that's going to pan out or not. And they were talking, oh man, it might work out in 2030s. Well, it's like, okay, that's 8 years away at the earliest then. So I don't get what's going on there. But as for now, like, their legacy platform is doing pretty good. And then let's talk about the other two. So Apple, we know, has supply chain issues. Their earnings were pretty good, but they have supply chain issues. The other two big ones was Google and Amazon. We'll get to Amazon here in just a second. But Google did okay. They had some decreases on YouTube ad revenue side, so they kind of had bad earnings, I guess, on that front, and kind of had a drop down. I wonder if a lot of that is from the TikTok competition with video content and stuff like that. So I do imagine probably a lot of it is, which I was expecting Facebook to kind of mention that, because they had mentioned that in their previous earnings. So I didn't expect Facebook to do as well as they did. So I would expect a little bit more downside going into next week for Google as it breaks down the Wednesday low that it put in this past week from its earnings. I would start to look for the buy, especially as it got down to into the 2100 level. If it got below 2200, I was definitely start looking for the buy, because that's what I'm going to look for over the next couple months on a bullish trend back up, probably back up to 2500 level, like this support and resistance area. This is what I'm going to be looking for, so I'll probably cover more of that at a later time, but that's what I will be looking for, is getting into a bullish position over the next week for Google to go back to about the 2500 point level. And don't forget, they will be having a stock split, which if you look on TradingView, it is marked for July the 18th. So just be mindful of that if that does sway you any way or the other. So let's look at Amazon real quick. And Amazon, another one that got absolutely hammered on earnings. And this was a pretty good gap and go, bearish gap and go, because they had a very strong buy day yesterday, and then they missed earnings. They have a lot. Man, they're just so scattered, and this is what really a lot of investors have been asking about is, hey, you know, can we split off AWS from like legacy Amazon? Because it's like they're trying to do too much. They're involved in too much stuff. They're running media businesses, right? With Amazon Prime being having like a whole media thing, and you know they're doing obviously the cloud thing with AWS. I would imagine we start to see some of that break up. Maybe not anytime this year, but as Amazon continues to kind of decline in stock price, investors are going to clamor more for it, and so they'll eventually cave and do it, but I don't know when that'll be. And this is something that I very much have not been a big time bull on Amazon for a while, and a lot of it is, man, they're just scattered. They're all over the place. And if you look at like their long-term chart, let's look at a weekly chart, and they really haven't gone anywhere in 2 years, right? I mean, they're below where they were 2 years ago up until about last week. I mean, that was two whole years they hadn't gone anywhere. But this week, I mean, they really broke down pretty good. But I would imagine a lot of the short-term pain is probably gone. You can see them trade a little bit lower next week, but I would expect the buying to come in as I would expect buying to come in on the market. And so let's turn to the Qs and the SPY for what I am game planning for. Okay. So what kind of carried over from last week, and what I mentioned last week was I wanted to know what the market did when rates and the dollar stopped going higher. And if we look at the dollar, so this is like the dollar index, the DXY, and we just every day it was just up, 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 and it was up strong. It wasn't even up like some of these candles. Like we were just skying higher. And if you really want to know where we are, if I look at a monthly chart, we are at a long-term resistance level. So I'd imagine we do probably consolidate here if we are going to push higher, but I wouldn't be looking to buy the DXY right now. You'd have to wait, look, check out, and see if it's going to consolidate before it pushes higher. But we could definitely see some dollar weakness maybe here on the near term before it pushes higher. But the other one that I had mentioned was the TNX. The TNX. This is a 10-year treasury. So I was just kind of watching this. It had been going a lot higher, especially over the past 2 months, and this month over March and April. But it's getting close to this pretty solid support, the resistance line. And, you know, last week I did mention I wanted to see what the market did when the rates and the dollar stopped going higher. Well, Monday, rates actually came down. They opened down, they traded down. I think it was roughly 2% or so. Yeah, it was roughly 2%. And the market, if we look at the market real quick on the SPY, well, on Monday, the market traded down and then rallied pretty strong. So I was like, okay, maybe the market is going to go higher as these rates then push lower. Well, Tuesday, we got lower rates again. The rates opened down roughly 2%. Well, let's go look at the SPY and what it did on Tuesday. The SPY opened down roughly 0.5%, okay? A little bit over 0.5%. And then in the first 30 minutes, it traded down about 1%. So it was down about 1.5% within the first 30 minutes. And that's with rates already down 2%. And I was like, yeah, that is the clear indication that we're not going bullish. Like, that was it. On the gap down was a pretty clear indication. So when the market then just traded down immediately on Tuesday, which I'm looking at a 15-minute intraday chart here, that's this part right here. It was just solid down for an hour and 15 minutes. So you just had to be like, yeah, we're just going to go lower. And we didn't trade that much lower once we kind of did that. We got a little bit lower on Wednesday. And then we just kind of hung out in a zone down here. And then Thursday we popped higher. As, you know, we were just in a zone. We didn't break out and then popped higher. on Thursday, and then obviously Friday rolled over. But Tuesday was the day I thought that was pretty clear that rates were down and the market was down. And really, if the market's been selling while rates have been going up, and then obviously rates start going down, and then the market goes down again, I mean, the market's going to go down. There's just a lot of pressure on the market to go down right now. So I wouldn't freak out. The move's probably mostly over from these levels. I mean, we have a little bit more downside to go. I expect probably down maybe 3%. I'm definitely looking for it to get to the 400 price level. So we'll see when it does it. I would imagine it happens by Wednesday of next week. That is what I'm looking for. So I'm going to clean up this chart here a little bit, and we'll talk a little bit more about where I think the SPY and Qs are going. I'll get rid of that. That's not going to play out. So on the SPY here, so we saw some pretty good selling today. No joke, but we didn't get below the Russian invasion morning of February 24th. And the Qs, though, it did, and they broke down. I mean, that's tech. Tech has been breaking down pretty bad lately. And, you know, with some of the earnings and Amazon and Apple kind of just rolling over today, just definitely was not helping the Qs at all, okay? So back to the SPY. What we want to see here, or what I'm game planning for, I know it's up a little bit after hours. I wouldn't expect that holds on Monday. So what I'm looking for, okay, is Monday. I don't know how much we sell down Monday. We saw a lot of selling today. It was a lot. I would imagine Monday we probably have a hangout day. Just, you know, grab a pina colada, grab a margarita, and just kind of hang out. I don't know how much activity will be on Monday. It might be a pretty quiet day, as people are like, okay, what's going on? What are we doing? And people just kind of look at each other in the eye and figure out what's going on. So I don't know if we sell down hard Monday. Tuesday, or if we do, I think it might be later in the day on Monday. Tuesday, I think that's when we'll get some selling. We'll get below this 410 level from back in February, and we'll get into the 400 area. And then Wednesday, I'm expecting, but if this happens on Monday, but if we sell down on Monday, if we get into the 400 level, I would look for the next day a gap down, maybe to 400, maybe below 400. I would close all shorts, and I would start looking for long positions. 400, this 400 level, you've heard me talk about it before. This is an open gap from April of last year between about 403 to 400. You can definitely go find it. Oh, you know what? We'll just scroll over. This gap, this is an open gap. This gap, there's never been a price traded during regular market hours for the SPY. So that is the price level I am looking for. And so if we get down to that level, whether it's intraday or we open down at 400 or below 400, I will be looking for the buy. The other thing is, if we trade down Monday, get into the 400, but we don't really gap down on Tuesday, and we just start selling down and get to 400, I'll start looking for the buy to go up for the second half of the day, roughly, okay? So that is my game plan. I do think the market will stop going bearish by Wednesday and will start going bullish. Whether it happens Tuesday or Wednesday, not really sure. We do have FOMC on Wednesday. It might be one of those cases to where Tuesday we do sell down, Wednesday we gap down, get bought up immediately, kind of chop around, maybe down 1% from the open, or, you know, from the previous day's close. And then once the FOMC minutes looks like they come out, you know, we start pushing much higher, that kind of thing, and then it carries over into Thursday, Friday. That is my expectation. And the other thing is, over Thursday and Friday are really the timeline that I'm going to be looking to get into a bullish position. Will be out. Really, I'll be getting into some calls about 4 to 6 months out. And if you really want to know which calls I'll be looking at, so this is the option change for the SPY. So I'll be looking anywhere between 4 to 6 months. That will be, so May to September. So 4 months past May will be September. to November, but there's no November, right? September, October, November. So there's no October, no November. So I'll probably be looking at this. I want to get a little bit more time than September 16th. So I'll be probably looking at these quarterlies here, September 30th. These are the ones I'll be looking at. I'll be looking at the September 30th. And for roughly a strike, I'll be looking for a push, probably definitely back up into the 440 area. So I'll be looking for a strike around 430, something like that, somewhere in there. So the option I'll be looking for is somewhere around the September 30th to 430 strike on the call side. But that will be what I'm looking for, what I'll be trying to get into next week as I look for the market to hit the 400 price level. Okay, so that'll be my game plan going forward. And I'm going to do a little bit more analysis as I do think we are in the bear market. I was saying it before a couple months ago, but I kind of got chopped around here when we took out this high. We didn't do that in previous bear markets, but it's okay. It's fine. We just got to deal with the hand that we're dealt with. But what I'm going to do this week is I'm going to do some analysis for you guys and myself. I'm not going to say I'm just doing it for you, but also myself. And what I want to show off next week is what we can expect when we look at, and I'm going to go back and look at the bearish markets from the 08 and 2000 bearish markets. And let me hit the auto button so we can get back. Okay, so what I'm going to do is roughly figure out from peak to bottom to peak, peak to bottom, bottom to peak, peak to bottom, really all the performance and like the percentage moves, how long they took, and kind of figure out how long and what kind of percent move we can expect on some of these moves that we're going to get in the marketplace, probably in the bearish market. That's my expectation, probably going to last like 2-3 years. Like, you know, it just is what it is. But I'm just going to try and figure out what we can expect. Now, the 2008-9 bearish market, I don't really know how much I really want to give that credit, because this time period back in September, October of 08 was just so chaotic that I don't think we're going to have that kind of a scenario. So the one I'm really wanting to look at is the 2000 bear market and just see, you know, peak to bottom on like a lot of these moves where you can capture a lot of value on, you know, this bearish market that I think we'll be into. Now, the other thing, and I'm going to leave you with this tip for the week, is make sure when you are positioning for trades and positions, definitely just be cautious, man. Go out, make sure if you're doing options, buy extra time, go farther out, maybe go like an extra month or two, or double your expiration date from what you would normally do, and keep your position sizes just a little bit smaller, because there's going to be a lot of choppiness, especially if you've never traded markets like this. You definitely want to be a little bit smaller, a little bit more protective, maybe do things that kind of go both ways. Look for best of breed, look for worst of breed, and potentially, you know, try to play it both ways, as, you know, things are going to move together, but you're going to hope the worst of breeds perform horribly and you do much better on those sides. But if the market turns and does really good, the best of breeds do really good for you. So I will do some analysis, present that, come back next week, show that off to you, and we can hopefully get a game plan on what we can expect from previous session or bear market type environments. So I will do that on the SPY. I'm not going to do that on the Qs because I already know it's going to take a little bit of time to do that analysis. But for the Qs, man, I don't really know where we go here. I'm going to look at a longer term chart here on a weekly. I actually can spot a very good level that we could hit next week. It's going to be this 300. If we get to 300 or anywhere close to that 300, because that was a bottom back over here. There's a bottom here and a top there. That would be a pretty clear spot to where if we got down to that level, I think that would be the spot you're looking for on the Qs. As the SPY got to 400, I'd be looking for the Qs to get to 300, okay? So that would be my game plan on the Qs. Same thing for the NASDAQ and the ES. And another thing you notice here on the SPY on a weekly is we are gonna, if we do get down to that 400 level, we'd be coming into the 100 moving average on a weekly. So that would be another pretty good spot for us to hit some bullish or pick up some bullish type activity. So we will see what happens when we get there, but I'd imagine it definitely happens by Wednesday of this next week. And I'm gonna turn auto back on because it's really freaking my eyes out. So that is kind of all I got for now. I would look for the bearish side going into next week. I'd imagine we do break down. We're gonna have a flush out. And the other thing to look for, the one last thing, is the VIX. If this thing spikes and gets to the upper 30s as the market breaks down and gets to, you know, that 400 point area, I would look for the spike in the VIX. And if we get it late in the day, if we get like the market breaks down late in the day and gets down to 400, and you look over at the VIX and look and see if the VIX is spiking, if it's getting up into this upper 30 area, or if it gets into the 40 area, close your bearish positions and maybe don't go bullish, but you could start to pick up maybe a bullish position at the end of that day, because I would imagine we could gap up in that next day and probably take off a little bit and not come back to 400 for a little while. But I would be looking maybe potentially for that scenario too, where we just have a sell down to 400 late in the day one day, or maybe get below 400. Look at the VIX and see if it's spiking, getting up to the upper 30 area, potentially up where these levels are, maybe in the lower 40s. And if it is, definitely close your bearish positions and potentially open some bullish positions. And if we open up the next day, yeah, I think it'd be okay to go bullish at that point in time. One last thing. Sorry I did not get a video out this week about, you know, your stock, my plan. I will have one coming out for Monday. The market was just a little busy for me to get to that this week on Monday, Tuesday. I also had some family in town from this past weekend. So I will get that out on Monday. It will be RBLX Roblox. So if you want to check that out, feel free to come back and check it out on Monday. So have a good weekend. Alrighty. Take care, Alpha Hunters.